What's up, guys? Happy Monday. So I started trading call options. Today was my first day doing a call option. Options are you're placing a bet whether the stock is gonna go up or it's gonna go down. If you place a call, that means that you are expecting the stock to go up. If you place a put, that means that you're expecting the stock to go down. Now, out of the two, you need less capital to do a call. If you are gonna do a put, you need to be able to at least cover 100 shares of what you are trying to short. So the official term for a call is you are purchasing the right to purchase a stock at a specific strike price. Calls was what I was looking at all weekend. And I was ready to make some moves on Microsoft with the news that was coming out that they were going to be purchasing TikTok. It was a little too expensive. I did not feel comfortable risking a call of Microsoft because that's like over $200. This morning, the options, the call options, before I bought them, my equity, my balance was $529. Currently, I am at $590 with 64. I've added about $54 to my equity just with these options that I have. I ended up purchasing two call options. The first one was for a strike price of $31 for Uber, and I put an expiration date of August 21st. Uber does have their earnings report coming out. It was about at $30.50 when I purchased the call option, and it closed today at $31.15. I considered in the money. If I wanted to exercise my option, I would be able to buy it at under the current stock market. So right now it's at $31.15. I would be able to buy it for $31 even because that was my strike price. The higher up it goes above my strike price, the more profit that I will be able to make by selling this option. The market's always fluctuating. One thing I noticed with these stock options is that I was up maybe like $50 at one point, but then I was down like 40. It really fluctuates because a contract is essentially 100 shares. So whatever it moves, it's times 100. I decided to go with calls because of a call and a put. It felt like that is the one with the least risk. Don't misinterpret what I just said. A call option and a put options are both risky trades. By making a call option, I am saying that the stock is gonna move up. Not just move up, it has to move up to my strike price. The worst that I could lose in that scenario, just the amount that I put in to buy the strike price. If you look at Uber, just to kind of give you an example, the current share price is at $31.15. You need to select the expiration date. Now just keep in mind, the shorter time frame that you have, the more cost effective, the more time that you have, the more that the premiums are gonna cost. So just to give you an example, so this August 6th one, which is just for this Friday, at $31.50, it's $1.22. This is the premium that you have to pay to be able to earn the option. It's $1.22 per share. Each contract is 100 shares. This is $122. If I were to purchase this call option here for $122 of $31.50, if the stock goes up above that amount, I will be considered to be in the money, and then I will be able to sell it, ideally for a profit. Now, August 7th isn't that far away, but if you look, so for that same $31.50, so if I go out 1 week, it's now $1.45. And then if I go out a third week, it's $1.71 per share. Times that by 100, that's $171. Now, as you go further away from the current stock price, so 33, 34, 35, 36, this is how many cents per share the premium is. If I felt really aggressive on the stock or bullish, as they would say, then I would be able to purchase this call option for $29. This stock has to move to above $37 per share by August 21st in order for me to be profitable, or to at least be able to exercise my right to purchase that stock at that price. If it does not hit that amount, my risk is the premium that I paid. So all I would lose is the premium. So I would lose the $29 if it didn't hit that amount. Now for myself today, the call that I purchased was $31 for $1.51 a share. If I sell that back right now, I bought at $151, $195, I'd actually make $45. I did select this option for August 21, so that's about 3 weeks. I don't think I will hold it for the full 3 weeks. I might just hold it for this week and sell it at a profit right before the earnings, because I think it's gonna climb before the earnings, and then when the earnings come out, it's gonna level off. So I don't think I'll hold it for the 3 weeks. I'm already in the money and I am looking to make a profit. I also purchased another call option for Snapchat. So this one I did choose a little bit longer time. So I chose it for September 4th. I bought it at 96 cents a share for the premium, and the strike price of, what was my strike price? $22. So I bought it for $22 call. Right now, currently Snap is at 21.07. So I am still under what it's at. But if I were to sell this option back to the market, I would be able to collect a premium of $1.11. So I purchased it at 96 cents a share times 100. So that's $96. I would be able to collect $111. And because I'd be able to collect 111 and I spent 96, I'd actually make a $15 profit. Yeah, I chose these because, well, with an idea, with a plan. Uber has its earnings report coming out this week. So I know that there's always gonna be hype. It's gonna be moving up. I'm trying to sell this one this week to make a profit. Hopefully it continues to climb, and then I will go ahead and sell it. Snapchat, their earnings report already came out. That's already all done. But because the whole Microsoft TikTok ban and all that stuff that's going on, Snapchat is the one that kind of, if TikTok did get banned, Snapchat would benefit from it. Currently, right now, Snapchat is at, like I said, $21. So I got it for a strike price of $22. And I got it with a expiration date of September 4th. Keep in mind, with options, it's super volatile. If the stock market kind of pulls a 180 on me today, so I could actually, this $54, that's still up in the air. You know what I mean? That's not even for sure that I'm gonna lock it in. So you best believe I'm gonna be keeping my eye on it tomorrow to make sure that I'm not going under and losing money. But I did give myself 3 weeks on Uber, and I did give myself a month on Snapchat. So I am confident that these are gonna go up and we are gonna be able to make some money off of this. But these are options, guys. I just learned about them this weekend. I had heard about them before, but I didn't really kind of put too much effort into learning them because I heard it was super risky. You got to spend money to make money, right? So scared money, make no money. I stayed out of Microsoft, not necessarily because I didn't believe in it. When the stock price is more expensive, the premiums are more expensive. I went with stocks where they're worth less than $100 per share. I didn't want to risk too much of my equity. Right now it's at 216. The premium for a 217.50 call is $338 per share times 100. That's $338. If the stock price did not go above that amount, guess what? I lose $338. And I just wasn't ready for that. If the stock price went up to 225, which it might, right? It 100%, I think it might, it could. Not by August 7th though. I think I would do like a September 4th, because actually September 11th, because Microsoft was given a September 15th date to make that deal. When you extend the time frame, the premiums go up. So September 11th, that same 225 call option that was 143 for August 7th, at the same one, it's $593 per share times 100, that's $593. Do I believe that the stock price will go up 225 by September 11th for Microsoft? Maybe. They always say ride the news and then dip out before the news, because you never know. If the news is bad, then guess what? People are gonna sell off. That's how I made $54 today just doing call options. It is risky, keep that in mind. I am not a financial advisor. I don't do this for a living. I work for a living, and I am just trying to make some money, right? Take advantage of the economy right now, take advantage of the market. I was never taught this growing up. So everything that I'm learning, I'm using YouTube, I'm using online resources. I'm watching a lot of videos. If there's something that you don't understand, rewatch another video, look up another term, just go on that. That would be my advice to you. Puts are still a little tricky to myself. I think I understand it, but with puts, which is the opposite, where you think the stock is gonna go down, I think the losses on that one is not limited to what you put in as a premium. Your losses can be unlimited depending on how the market goes. for that Uber one, right? So instead of me thinking that I think it's gonna hit $31, say I thought that it was gonna it's gonna go down to $28. Anything above the strike price of $28, so if it's worth like $29, but it went down and everything, I think I'm good. But if it goes past the $29, 28, 27, 26, 20, anything down there, my option would be to buy the stock. I have to buy the 100 shares at $28 a share. I mean, $29 a share, even though the stock is maybe it's trading at $25, $24 a share. So that means I have to buy it at a higher amount because that was the strike price that I chose. So my losses, essentially, if the market all goes from 30 to zero, I would owe all of that amount there. And that's what I think, but put options seemed a little more riskier of the two, and just getting into it, I do believe that Uber and Snapchat will go up. They also say to select the strike price that is nearest to the actual stock value of what it is right now. Now, of course, it's gonna be more expensive, but that is gonna increase the likelihood that you actually make money. That's where I'm at for today. If you have any questions, put it down in the comment below. Call options. Let's see how it goes. Laters.